Let me grab the screen and so it has been a very confusing time in the markets. So trying to figure out where we go from here is what I've been spending some time, a lot of time on as a firm. That's what we've been focused on, is how does this resolve itself when you have so many competing issues. So I really want to talk about three things today: the slowing global growth, discuss is inflation peaking or not, which there's been some discussion on, and then touch on the views of Kissinger and Soros on how you bring an end to the war in Ukraine. So let's jump right into it. Obviously, this is a very difficult time in the global economy. We've had, after a highly stimulated rebound from the depths of the pandemic in May of 2020, we've had this big rebound, and then we started taking the stimulus away, and you started to see growth revert back. And that's going to be something we're going to be struggling with, I think, a period of lower growth for some time now, because we aren't going to be able to stimulate the system as much as we have in the past. And because the inflationary pressures, we're actually going to be trying to slow it down even more. So I think you're going to have a period where trying to manage the growth at an appropriate level is going to be very difficult. So I think we're just going to be in one of those periods where you're going to have tough growth, difficult comps, yet there'll be some significant winners, and we'll touch on them in a minute. What is interesting, though, is through all this, the difficulties that we've had here, you are still seeing PMIs, both from manufacturing services or the composite, in an expansionary mode above 50. And as long as we're staying in these ranges, that's going to be pretty healthy for creating a better outcome. If we do dip into recession, it may be a more shallow recession than I think people might be projecting with some of the concerns that we have out there. But clearly there are a lot of issues. One of the things that's been slowing the global economy down is the fact that we've been raising short rates for some period of time. So there have been about 190 central bank increases of short-term rates since February of last year. There have been 60 in the past 3 months, and a lot of these have come out of the emerging economies. We have seen Brazil have 10 rate increases where they took their rates from 2% to 12.75% from beginning of 2021 to now. You're seeing rate increases now being announced in a lot of the advanced economies, but we're still at relatively low short rates historically, whether you're in the emerging economies, the world economy, or the US or advanced economies. But it is interesting how low the advanced economies are, given where we were from any point in time. What's also interesting is long rates, while they've moved up, have not really broken the trend considerably from where we've been in going into 08 period, and much from 2001 to 2008. So we're moving back towards a more normal rate environment, which is slowing the economy down, and that's dealing with some of the excesses. So this is part of why there's a view that certain areas of inflation are actually coming down already, and you're just not seeing it play through. But this is an important thing to keep in mind, that global long rates have not moved up all that materially compared to global short rates. Global short rates will have a bigger impact on slowing things down and weighing on some of the short-term trading. But this tells you that as we're looking out longer term, the rate moves are not as concerning as they might have been. We're also seeing trade being quite strong in spite of the fact that China's in lockdowns and we're going through these distortions that are coming from the pandemic and from the war. You are seeing trade still being quite high. And I think one of the challenges for those on the import side is, what are you importing? Is it food and energy? And if it is, you're going to be importing higher inflation. If you have a strong currency, you're going to be importing stuff at a lower rate. So I think this is something we're going to have to keep an eye on, but we're above pre-pandemic levels in global trade right now. What's interesting with that is, while we're back to high volumes, the Baltic Dry Index is coming down, And that's a kind of a sign of some of the easings of some of the pressures that exist in the system today. When you look at commodity prices, you're also seeing some easing in precious metals. You're also seeing some in the industrial metals, but we're not seeing any of the easing. In fact, we're seeing increased pressures on energy and agriculture, which we know are coming out of the war in Ukraine and the issues with the sanctions on Russia still having to be played out. And a lot of this is going to determine really where we do go from here. But you're going to see in some areas pockets of inflation coming down and pockets still remaining quite high. I think that's going to be one of the challenges for how you sort out what's going to happen in the global economy. So you have seen a big move in core inflation, particularly in the fourth quarter of last year, the beginning of this year, but you are starting to see elements where core inflation is coming down. And part of this has to do with the layoffs that have started to come, or the other issues where a lot of the tech area is starting to see slowing their hiring plans or actually starting to lay off. Some of the startups are starting to do some layoffs. And as we talked about a little bit before this call started, that you are starting to see people like Sequoia telling their startups to save money, slow down their hiring, look at essential, non-essential personnel and all that. We're going into a mode where people are going to be much more guarded about their spending, and that's going to create some pullback on the inflationary pressures that were coming from supply and demand. And I think we're going to start to see this in wages. And that's going to be one of the interesting things is if you start to see tech layoffs and slow down in hiring, are you going to see wage pressures ease? Is that going to take some of the pressure off? Obviously, headline inflation is going to remain high. And with the sanctions and the challenges of weaning Europe off of Russian gas and the promise of the blockade, we're going to see food and energy remain high. But one of the things that's a little misleading about the numbers, when you look at the year-over-year numbers versus the rolling 3-month numbers, in core inflation, you're seeing the rolling 3-month numbers come down considerably, but you still have food and energy way up, and that's going to create some distortions. But we are seeing some of the things that people are spending on every day. Lumber's down now, you know, what they say in the journal, over 50%. So you are starting to see some of the things that worked into excesses over the last year starting to ease. You're seeing it with lumber, you're seeing it with used cars. A lot of the things that we were counting on seeing elevated prices are starting to come in already, but you're going to see it in waves. It's going to roll through different areas because you still have airline tickets up and, you know, gas prices were hitting peak season. So energy is going to remain high, which is going to keep headline inflation high. But we're going to have to deal with the food issue because it's going to spill into the Middle East and create some more tensions there and a lot of social stripes. So this is where everything's going to come to a head, I think, is how this plays out. But we are starting to see some easing on the core side, which should take some of the pressure off. We are starting to see with the slowing growth, you're seeing people more conservative about their hiring practices and spending practices, which starts to ease some of the inflationary pressures that were going to exist. So shifting gears, before we get this, I do want to touch on Kissinger and Soros for a minute and talk about the two very divergent views of how they think things should play out. And I'll start with Soros because I think he's more mainstream in his views of how we should deal with this, which is he thinks this is the beginning of World War III and could spell the end of civilization if Russia is allowed to continue down the path they're on, or if we give in to letting them even take part of the Ukraine away. So he's very much against his fight for democracy, as he's been for some time. A fight he has not won in Hungary, and a fight he's going to continue to go on. Kissinger is more nuanced, and I think the headlines for Kissinger is Ukraine should give up part of their sovereign territory, which is highly unusual for a statesman like Henry Kissinger to make a statement like that. But I think what's missing in it is some of the statements he's made around the enormous destructiveness of the weapons that exist today and the lack of a policy or plan for what we should do if we're in a mode where a nuclear war actually starts. There are no protocols in place to deal with that. And the weaponization that's gone on of the world has gotten much more aggressive in that area. And he thinks that's in part due to the evolution of technology. And in that scenario, it's very difficult to promote regime changes as a policy for the US. So he thinks that, that we have a potential to produce levels of catastrophe today that are not even imaginable. And so I think where he's coming from it, where he's alienating people saying, it's easy for US statesmen to suggest that Ukraine gives up part of their territory. I think he's looking at it more holistically than just a US bias view. I think he's thinking about this from, how do we let this go on, and could the damage of a nuclear war be far beyond what anyone's contemplating now? So I think this is a very interesting and very challenging environment from a geopolitical perspective of how you navigate this. And you see the conflict that we have in US policy when, President Biden, was trying to describe what we would do with Taiwan on one hand, where we would support them, and then coming out saying we wouldn't go in and provide any missiles that cross the border into Russia right now. So we have a very confused foreign policy. And I think what Kissinger and Soros are really trying to do is create a dialogue that puts the foreign policy on a clearer path, when you can't just say what you think off the top of your head. I do think the enormous destructiveness of the weapons that exist today is something we really haven't addressed. And if nukes start flying, how do you get out of this? So I think there's some real issues that we haven't really come to grips with. And I think a lot of the world is dealing with that. I think China's in the throes of trying to figure out how do they deal with the economics and the politics and the picking sides in an environment that's very difficult to see what the natural outcomes are going to be. And then I would add to it, from the US, we have a policy right now where we're trying to figure out what they call 1+1+3, which is what's our foreign policy for China, what's our foreign policy for Russia, and the +3 would be North Korea, Iran, and other terrorist nation states, and how do we deal with them? And part of what Kissinger was saying was it's very difficult to go against two adversaries whose interests aren't always aligned, but if you force them to align, you'll be the third odd man out. And he's really trying to make it so that the US and Europe is not up against a unified Russia and China in their approach. So very confusing, very complicated situation. And I think what's happening in Russia right now and in Europe with trying to wean off of Russia oil and gas is actually really confounding the problem in a much more difficult fashion, because you now have politics, economics, military, and social issues all coming together at once. So I think we're going to be in a period where the will of the European nations to deal with the pain that's coming in the form of higher inflation, both food and energy, and what that does to the rest of the world, particularly the Middle East in the food side, and Latin American nations as well, is going to create the pressures that are going to force people to choose kind of the Kissinger approach or the Soros approach to deal with resolving the problem. So I'm going to stop there because our investment focus hasn't changed. It's quality, liquidity, short duration. We still favor equities over bonds, but think it's really much more about finding the businesses that are going to benefit from the secular themes in this environment, because nobody knows what's going to happen over the next 6 to 12 weeks, because there's just too much uncertainty. What we do know is we're going to continue to go through this digitalization process of increasing productivity. We're going to focus on the electrification of the global economy. We're going to continue to focus on national security. That's going to make scarce resources like commodities even more important. I think M&A is going to continue to be a big issue. Healthcare is still remaining an issue, as you now have the new pox that we're dealing with, the monkeypox, and now we have still ongoing issues with the pandemic. So this is going to be a challenging time, but I'm going to stop there and open up for discussion, Mark, or whoever's running this call today. So thoughts or comments?
Yeah, great stuff as always, Stephen. Thanks. Just a couple one of the speakers of one of the conferences that I was at last week was the former Prime Minister of Hungary, who actually I didn't know who he was until he was up there on the podium. Pretty sharp guy overall, and his take on the Ukrainian thing was that ultimately it may only be like southern coastline of Ukraine that Russia might wind up with, Donbass and the Lugansk, area, maybe. But ironically, and sort of per your Kissinger comments, he said it's going to take a Kissingerian, I can't even say the word, but it's going to take another Kissinger to negotiate it because both sides are so entrenched.
And Russia has not really even wanted to engage yet in that dialogue.
Right.
So it's going to be tougher to get to the finish line with that. And I think that the uncertainty around what is a win for anybody in this at this point, combined with the inflation that's being created by a lot of the war issues, really makes it a very difficult to try and invest for the next 6 to 9 months. So I think you have to look past that. Is really the only way to invest in this environment.
Stephen, it's Rob Colorina here. I was curious, you mentioned technology. Your comments didn't touch at all on Twitter and the Musk pursuit or where things stand there. Do you or anyone else, on the Zoom have any sort of related insight? Is this a tactic to lower the price, or do you see this as a potential permanent withdrawal?
I have no unique insights into this, but he did need to know what he was buying and what's real in terms of their numbers or not. So it's actually was a question when they were going to figure out, what the real value of this was for advertisers. So I think he needed to do what he did, but I'm sure it was to get a better price if he wants to go through it at all. So I'm not really sure what his real end game is, but
I guess because some of the thought here is that he could hurt his deal reputation by being viewed as, hey, I'm signing up for this, and then doing a bait and switch a little bit. But if it merits it, I get it. But I just think it's some interesting tactics.
Yeah, there's a lot of sloppiness in how this all came about. So I think it's going to be tough. But the problem with this is one of the most political areas of regulation these days, and his involvement with it is probably going to politicize it even more. So it's going to be interesting to see when you have, him with Twitter and Bezos with the Washington Post. What's next? So it really has big social and political implications that we haven't really thought through.
Does anybody have any thoughts on sort of additional ramifications for Twitter? Because if they said, gee, only 5% of our traffic are bots, but if it's really closer to 10 or 15%, then it seems to me, if they know or should have known they're putting that out there anyway, then they are setting themselves up for and deserve everything they get with respect to sort of, lawsuits from shareholders, et cetera, to penalize them for their, kind of putting out false statements and swearing by them.
How about all the people advertised on them too?
Absolutely, yeah.
Using those numbers.
So I wouldn't be too upset if they crushed them for that, but that's just me.
Would that percentage on Twitter in terms of representation of bots, would that be a proxy for other social media platforms like Facebook and Instagram? For those who know that area.
That's a great thought and certainly worthy of investigation. I don't know, but I'm embarrassed I didn't connect that dot, but good thought.
I think it's going to become more increasingly difficult to determine what accounts are real and which are false. I've just come back from Nashville and had a demo of the creation of virtual humans, including those who are synthesized fully and those that are mirrored I mean, they are from real humans or sometimes not. And I think it's kind of fascinating. It will become increasingly difficult to know, even on Instagram, who is a real account and who isn't, and doesn't matter at the end of the day.
Yeah, I think what you're speaking to is how all that is merging with machine learning and artificial intelligence and leading to this future that, Ian Bremmer refers to it as a G0 world. And that seems to really ring true for me because what is that? What's going to fill the vacuum? It's big tech. It's Bezos, it's Musk, it's all these people dictating geopolitical issues and kind of where we're headed. And it just seems like we've passed a tipping point in which the ambiguity is only going to increase exponentially. And we're not going to know who's who. Identities are going to be hard. It's just going to be hard to identify concrete things that we can invest in for impact or what have you.
Just Stephen, just as a related thought to your suggestion of Soros and Kissinger, I respect the comments. I think though both those guys are close to 80 or 80 years old and plus.
I think
And
they're
I
90s.
in terms of leadership, I think in terms of leadership, in terms of next gen that has the both energy and the resource to pull it off, are things moving towards like guys like Musk and Bezos and as being sort of the next gen, both policy and principle makers here?
It's a good question. For a while we thought, Larry Fink and Jamie Dimon were the kind of the corporate, connections to politics and the like. It's a good question. Is it just going to go to the richest, or who's it going to go to? Or the guys that control the media? I don't know. It's just part of the more confusing times that we're living in today than we've been in the past. I think Jeanette, you're right. This is the collision of tech and daily life and the geopolitics of the world all colliding together at once and creating a world that's very different. And at ARS, we wrote our last outlook 2 months ago, and the title was "Everything's Changed," because I think this war has actually created a whole different landscape for all aspects of our lives. And layering it on top of the pandemic is just, I think the amount of change has been too great for the system to absorb in a reasonable period of time, which is why we're having the volatility that we're experiencing today.
Hey, Stephen, go back to this issue of, Kissinger and Soros. You could pick all the stocks in the world you want, but if somebody dropped a nuke tomorrow, I assume we'd open up down 25%. Every market would basically do something like that, wouldn't it?
It depended on where they dropped it. It might be down a lot more.
Okay. Well, anyway, so yeah, I don't want to be beholden to number, but so you've kind of got these parallel worlds where it's like, okay, there's the scenario where nobody ever drops a nuke and we're trying to find the place to be invested. And then there's a scenario where somebody drops a nuke and you'd rather you were just in cash. And we could be with this for a long time. And if you play that out, the problem we've got right now is any local punk that develops a nuclear weapon is all of a sudden got on equal footing with all the the biggest countries in the world, right? And so, to me, some solution has to be figured out to that. How do you, I can't imagine we're going to spend the next 50 years worried about 40 little dictators deciding they might hold everybody hostage to the fact that they might drop a nuke. That's really the issue here, right? Because frankly, if it weren't for the nuke, somebody would basically just annihilate the Russian army in the Ukraine and just back it up with UN doctrine and say you're not allowed to invade a sovereign nation. The only reason that doesn't happen is because there's this threat of this nuclear thing. So, there's sort of two things going on. It's like, how do you invest in this? And is there some scenario or a way to sort of take away this instrument of empowering, a really relatively lower resourced country that's run by a psycho. Not just Putin, but there's 10 of these guys, right? So how do you, how do you invest in that world? And B, if policymakers decide they're going to find a solution to this, I got to believe it's got to go along the lines of how do we eliminate that?
Well, that's part of what Kissinger was saying, is there is no protocol for what happens when the first one flies. And if you don't have that protocol, then you don't know how all these different actors are going to respond to it. So, when the nukes start flying, what do people do? So that's part of where his concern is that we don't even have any kind of agreements in place for how you respond to this around the world.
Well, don't we have a protocol for that? I thought the protocol was nobody's going to do it because as soon as they launch one, the other guy's going to launch one because they don't have, it's like shoot first, ask questions later, right? Is that protocol, that assumption, is that eroding here?
I don't think he considers that a real protocol other than that's a hope, not a protocol. I think that's the issue, is there is no real plan for what happens. Andrew?
Yeah, hi. Good to see you guys. It's been a long time. There's an excellent article in Foreign Affairs, the last issue about specifically about China increasing their nuclear arsenal significantly, and how that changes from what has been for the last 70 years a bipolar nuclear world, and how the math becomes exponential, particularly when you're talking about mutually assured destruction, which is the theory that we're talking about. Mutually assured destruction is not protocol and it's not policy, but it's been the bedrock of a bipolar nuclear world for a long time. And when you add China into the mix, and China's increasing their stockpile to be as close to the US and Russia as possible, the math gets really funky. And I highly recommend everyone read it. But for the author does touch on the smaller nations, the nuclear powered madmen, and whether we want to admit it or not, there is some form of rational behavior on their part, which stops them from using their weapon, because they know if North Korea lobs a bomb into Los Angeles, our population is going to demand retaliation. And so it will be mutually assured destruction, or it won't be mutually assured destruction. It'll be, we assure that you will be destroyed, because it takes more than a handful of nukes to destroy the United States. But I highly recommend you get the new issue and read about that, because I found it to be fascinating.
But, Duncan, this is Rob. I like what you and Andrew were saying, but I think even before there, I would hope that we have policies in place that address use of ground troops, which would happen probably before nuke type thing, or chemical weapons, which are very serious, but it is less serious than the nuclear option. And I think the reaction to those moves would be, I hope they're very well thought out.
I just want to quick say, I feel like I've heard what we're going through in the States now referred to as a cold civil war. And mutual assured destruction is one thing, but also what are we dealing with here domestically now? And how do we work through that in addition to China, which is focused on one belt, one road, more of a art of war type expansion, as opposed to, I just don't see them invading Taiwan anytime in the near future. It's just very complicated.
To tie into that, if I could, Stephen, just a quick one. I just uploaded the National Intelligence Council's Global Trends 2030 report, and you had mentioned that on the call that we did last week, which I really appreciated. I went back and I reread it, and their prediction back in 2012 was that a war in Southeast Asia, one of the potential scenarios, what would bring together the US, Europe, and China to then combat the war, diffuse it, and that collaboration would lead to further collaboration on things like addressing climate change. The scenario that we're in today is more of there's a war in Europe, the US and Europe are collaborating, China's on the sidelines. My question is, do you see enough financial resource without inflation going back up for the US and Europe to both tackle a war, send military assistance, and invest into a new energy transition without inflation then going back up? Thanks.
No. For those who've been on the calls, I've said this for a while. I think we have more needs than we have money for right now. And the way we've been attacking all these problems is spreading a little bit around to everything and not fixing one problem and moving on to the next. And I think we have a priority issue that we're going to have some really difficult choices to make. And I think you're seeing it in the energy transition right now. Is there trade-offs that you have to do all the time. You just can't work on ideology. You actually have to have a real plan. And so I just don't think the world has enough money. I think coming out of this, I think there's one of the things that the central banks are most worried about is if we get into too deep a recession, they don't have the financial wherewithal to stimulate out of it this time. So that's part of the problem, William, for dealing with all these issues is we've spent a lot of the money trying to deal with the recovery from the great financial crisis and the pandemic. To now deal with all these other things is going to be very difficult. And add to it, if we have a food crisis around the world, and we have to support other areas, and this is before we get into a rebuild of the Ukraine from the war. So the bills just keep adding up, and we're dealing with a global debt of close to 300 trillion, and a 2% move in interest rates has added, what's that, $6 trillion to interest costs that we're having to deal with. So globally, so just do the math. It's hard to see how we can deal with all that.